Yo, what's up guys? It's your boy Ray back with another very special, powerful video. And boy, today's crazy, man. I don't know if you guys have taken a look at the stock market today, but I'm just gonna give you guys some real-time data right now. And today is May 12th, Wednesday, May 12th, and at this exact moment, the Dow is down 538 points, the S&P is down 74 points, and the NASDAQ is down 326 points. And man, we are seeing a bloodbath today, and that's what really motivated me to want to make this video for you guys, to talk about the reasons why we're seeing this bloodbath today in today's market, and discuss, some very important numbers that came out today that are really causing this massive sell-off that we're currently seeing. But before we get into this video, please be sure to like this video, comment on this video, and subscribe to the channel. I got my shirt on today. I got the Elite Millennial t-shirt on today, coming out real soon for those of you who are interested. But yeah, subscribe to the channel, man. As Elite Millennials, we're all seeking to be the first multi-millionaire in our families, and we will succeed. And this is a channel that you want to subscribe to, because I talk all things business, all things finance, all things entrepreneurship, giving you my first-hand experience and some of the things that I'm doing to build wealth. So if that's something that you resonate with, subscribe to the channel, and I think you're gonna get a lot of value from it. But let's get right into it, guys. Let's go. Alright guys, so let's get right into it. The stock market bloodbath freaking continues, and I got notes right here that I wanted to definitely touch on. But a lot of you guys are probably wondering, Ray, why is the stock market taking a freaking nosedive today, and why has it been taking a nosedive for the past couple of days? And really the main reason we're seeing this big sell-off today is primarily due to the CPI data that was released this morning, and that is what is causing this sell-off. And I'm going to explain to you guys what the CPI data is right now. Alright guys, so what is the CPI? CPI stands for Consumers Price Index. All right, and what that means is the Consumers Price Index is basically an index that measures what consumers pay for goods and services. In particular, what consumers are paying for clothing, what consumers are paying for groceries, what consumers are paying for automobiles, what consumers are paying for restaurant meals, things like that, things that we spend our everyday income and earnings on. The Consumer Price Index measures rises and falls in those prices of goods and services. All right, now guys, now that we know what the CPI index is, I'm gonna tell you guys what the number came out to be today and why this number caused an all-around sell-off in the market. So I got my notes here in my hand, so if you see me looking down, that's what I'm looking at. But the CPI numbers came out today, and we saw a 4.2% increase year over year in the overall prices of goods and services in April alone. All right, so in April, we saw a 4.2% year over year increase in the prices of goods and services. And what year over year basically means is comparing it to April of 2020 to April of 2021. So anytime you hear year over year, that's what they're talking about. They're comparing the whatever metric they're looking at from the previous month of the previous year, right? So we've seen a 4.2% increase in overall prices of goods and services year over year in the month of April. And this is actually the largest increase in a 12-month period that we've seen since 2008. And I thought that was honestly super interesting, a super interesting fact, considering that 2008 and today's current conditions are two very unique economic experiences that we've had in the past 2 decades, right? We're living in times that are super unique right now, considering the COVID-19 pandemic and this widespread virus that caused the entire country to shut down, and they forced hundreds of thousands of small businesses to close their doors. This is something that we've never seen before, so I thought that metric was super interesting. Also, speaking about the CPI data, the price for goods and services increased 2.6% from the year ending in March. So from the beginning of this year to the end of March of this year, we seen consumer prices for goods and services increase 2.6%. Now, you guys may be wondering, Rari, why, if we're seeing these increases in goods and services, why does that cause the market to sell off as dramatically as we're seeing right now? And the main reason that the Dow and the S&P and the Nasdaq are getting absolutely obliterated today is because the overall market is fearing that this inflation that we're seeing, this increase in consumer goods and services, is going to cause the Federal Reserve to basically raise interest rates. As I talked about in some of my previous videos, the Fed recently came out and said we expect to see a period of transitory inflation, meaning we expect inflation to increase only temporarily, and we expect eventually for things to normalize. And because of this, the Fed said that they don't see themselves raising interest rates anytime soon. But now the market fears, after seeing this huge increase in April of the consumer price index, that this could potentially put pressure on the Federal Reserve to raise interest rates. And that's mostly why we're seeing this huge sell-off in today's market, is because now we are fearing that the Fed may actually double back on what they once promised and actually end up having to increase interest rates. And this can be a concern for a number of reasons. Obviously, basic level economics, we know that when the Fed keeps interest rates low, it makes access to credit a little bit more affordable. So your everyday retail guys, your everyday elite millennials have access to credit at lower cost. Mortgage rates are, at all-time lows. Once the Fed starts to slowly increase this interest rate, it's gonna cause credit to become more expensive. It's gonna cause mortgage rates to go up. And this is ultimately going to affect the consumer, because the consumer will have less discretionary income to spend, which can hurt the underlying economy. All right, guys. Secondly, the market is also tumbling because the market is starting to fear that what if this inflation is not a transitory thing, right? What if this inflation that we're seeing in all commodities across the board, in the consumer price index with clothes, groceries, automobiles, what if this inflation is not just a temporary thing? What if it's not transitory, and what if it is here to stay? So now the market is actually beginning to fear that this just may not be some transitory experience like the Fed thinks that it is. And what if it's here to stay? And what are the long-term implications if this inflation is here to stay? And I was reading a Wall Street Journal article this morning, and in particular there was I don't remember his name exactly, but he mentions that typically when you see rises in inflation, when you see the cost of goods and services rise, they don't tend to come back down. They tend to just settle, and we tend to enter a new norm of just these higher prices, right? So what if we're seeing these prices raise and they're not actually going to normalize? These higher prices that we are seeing are going to become the new normal. And I think that is what the market is also fearing, outside of the Fed potentially raising rates, is what if this inflationary period is not transitory and it is here to stay? All right, so a lot of you guys are probably thinking, Rare, what are your thoughts on this whole thing? And honestly, I think we should have expected this. This is exactly what the Fed came out publicly and said that we were expecting to see. The Fed said that they were expected to see a temporary period of overinflation. So the fact that we've seen the CPI increase to 4.1% in April is exactly what, this is in alignment with expectations that the Fed had. And my thing is, what did we expect, right? This is what we expected. We have all this pent up demand from people being stuck indoors for the past year or so, that obviously, we're going to see a huge flux of demand because people are eager to go out there and spend their money. Outside of that, we also have very accommodative fiscal policy with you know, the Biden administration giving out the stimulus, you know, what was it, $1.9 trillion? I think it could have been even more than that, but we'll just say $1.9 trillion in stimulus, right? You know, those $1,400 checks. So consumers have more money in their pocket, you know. There's this, you know, pent up demand that we're now able to, because people are more vaccinated, go out there and enjoy a movie now, go out there to their favorite restaurant, go to the mall. You know, people are vaccinated, people are ready and excited to spend money. And I don't think that this is going to be here to stay. I think that eventually, you know, things will normalize, things will get back to normal. And I think when you consider where we were a year ago and you're comparing these year-over-year figures, they're gonna be a little out of the ordinary, because obviously a year ago we were in a freaking pandemic. No one could come out their house. People weren't spending money as much as they are going to be within the next, you know, 6 to 12 months. So I think that yes, this inflationary period is super temporary. I think that once the economy fully opens back up, because we still have some states that are on lockdown. I know that New York has expectations of opening back up in July. I think once things fully open back up, we're gonna see even higher inflation than we're currently seeing right now. I just, you know, read the numbers. I think GDP for the first quarter was at 6.4%. which was exponentially higher than what was anticipated, and they expect that in the second quarter, GDP is going to be 8.1% on an annualized basis. So I think that within the next 6 to 12 months, things are just going to, you know, inherently get worser. And once we fully transition out of this pandemic period, I think that things will start to normalize. I don't know if prices are ever going to go back down, but I think there's going to be a new standard in prices. And, you know, I don't know, who knows if that's going to be a good or bad thing, but I can definitely say that we are in very interesting times. But there you guys have it, your boy Raleigh. Like this video, comment this video, subscribe to the channel. Peace.